We start off with the reopening rally Rorschach test. We asked you this question. Which did you see today? The Dow closing at its highest level since March 10th, a rally fueled by vaccine hopes and a rotation into banks and industrials, or did you see this? Stocks closing near session lows and the S&P 500 failing to hold its 200-day moving average. Guy Adami, how do you interpret the ink blot?
Well, being that I can't see it, is that the guy from Welcome Back, Kotter, Mel, or no? That Rorschach test guy.
I think we're having some problems with Guy's audio here. That's technology for you. So, Tim Seymour, we'll go to you on this. Which ink blot did you see today?
I actually heard Guy, and he made a bad joke about Welcome Back to Kotter. But I saw the blot that actually had the market closing near its March highs. And we have a case here where I think the reopening has allowed people to look at industrial and call them value stocks, but the ones that were the most beaten up, and to begin to assess what schedules are going to look like for airlines out through kind of early to midsummer. We have no idea, but we also have some sense that the worst case has been largely priced in for a lot of the big industrial names. A GM had a big breakout day. And then you have the banks, which I know we're going to spend some more time on, but some sense that both between where the yield curve is maybe at its worst and that the consumer may be better is part of that rally. But maybe the best part of the rally, frankly, was in some of the beaten up retail stocks and some of these folks that were being left for dead. Maybe they don't make a sustainable rally, but they make for a sense of catch up that I think if you look at how the market performed today, it wasn't growth, it was value. And that's something that people wanted to see. So my glass is Rorschach or Rorschach or whatever this is.
Now, you guys know the Rorschach test, right? You show a person an ink blot, you ask them what they see, it reveals their emotional state, perhaps traits about their personality. Dan Nathan, I have a feeling I know which ink blot you see, just knowing you for so long. But go ahead. What'd you make of the rally today?
Really unimpressive. You know, when Tim just points to those groups that rallied or that closed decently today, when you're thinking about retailers, you're thinking about industrials, you're thinking about some of these transports, you're thinking about the banks, these were some of the hardest hit groups. I would say that the banks are probably the highest quality of all of those, and their rally was the most impressive. I don't think you can say, if you look at MAGA, you look at the NASDAQ in general, closing down 2% from the morning highs, that that's the most disappointing thing given their outperformance. But I'll just say this, if you are relying on a consumer-led recovery in the back half of this year or early 2021, you are not paying attention to what's going on. 1 in 5 workers are unemployed right now, and they are benefiting, a lot of them, from $600 more a week in unemployment benefits. That will go away this summer. This is not a consumer, I don't care if it was delevered or this or that or whatever, that's coming back in a meaningful way. So we're going to go from north of 20% unemployment to possibly 10%. That's the floor in the back half of this year, and probably the floor for much of 2021. Double the lows where we were just 4 or 5 months ago. I just do not see the consumer coming back in a meaningful way. I see new and different jobs going away in the next year. And I say this with no glee. It's just sad. I think the stock market is just dislocated from that economic reality.
Karen, what did you make of the action today?
I mean, I understand and share Dan's dislocation, except for that the Fed has sort of told us they're going to be there, and it wouldn't be shocking if once some of the money runs out, if they reload again, right? So, I mean, they've told us many times they have a lot of tools left. They're not done. I do think we'll also see Congress do something, some sort of stimulus as well. So if you think that those government, the Fed and the government can sort of get in the way of the gravity of the business cycle, which I do kind of believe, then I reluctantly say, you know, this rally kind of makes sense. If you put on top of that, you see just tons of pictures over the weekend of Memorial Day, and like the consumer has been let free, right? How many places did you see that were full or very busy, or, you know, the consumer wants to be out there and wants to spend. And at the moment, even if they're not employed, they do have income. So for the moment, I think we're going to continue to see growth, albeit off a horrific low. But I wouldn't short this market right here. I do think some of the retail stuff we'll start to see better we'll have a little more clarity when they report earnings. I think Ralph Lauren reports tomorrow. The stock's probably up, I don't know, 15% in the last few trading sessions. So the bar's gotten a lot higher for them. But let's see how bad it actually is. And as you know, and we'll get to it, I am long banks. I'm bullish banks.
Right. I mean, Guy, I think that you have embroidered on a sampler, don't bet against the consumer. That's right next to the lithograph of the ink blot that you have as well in your home. So, what do you make of the consumer at this point? And should, if we cannot bank on a consumer who will be opening up their wallets in the coming months, should we be pessimistic about this market rally?
Well, 36 million people unemployed. Before anybody ever heard of the coronavirus, consumer debt to GDP was, I think, north of 52%, which is historic levels. I mean, you can talk about the consumer's ability to spend, but it doesn't mean they should be spending. I mean, I've said it for 100 different times. Never bet against consumers want to spend. Should they be spending is another question in and of itself. I am shocked that we're here, clearly, because I thought we were going to fail at 2,800 in the S&P. But I believe the market is pricing in just about every potential piece of good news and looking past what's right in front of them. And what's right in front of them is, yeah, we have this reopening. We don't know what's going to happen, And in terms of the market is more expensive now, significantly, by the way, than it was when the S&P 500 is making all-time highs. And that's assuming you have $130 worth of earnings, which I don't think we're going to get anywhere near. Now, the argument is you got to write off this year. I get it. And there's going to be some sort of recovery in 2021, maybe. But I still think that too much optimism is being priced into this market right now.
Here's a hypothetical question, and I'll go to Tim Seymour on this. We've been rallying on the hopes of a vaccine, hopes of a treatment. What happens if tomorrow a company said, we have a vaccine that is going to be approved by the FDA, and we are going to start distribution of this vaccine and injecting people? Is that a sell the news event? I mean, are we in this stage right now? I guess the question is, are we in this stage right now where it's by the rumor of the cure, of the treatment, and if we do get a vaccine, that's sell the news?
No, it's not sell the news, because I think there are a number of companies that really I've used this metaphor. We're watching an hourglass and watching the sand tick through as really to kind of count how much or how many months they have left of cash flow. So I actually don't think it's an entirely sell the moment. I do think the other thing we haven't mentioned so far early in the show is the China factor, which Guy has brought up early. We spent a lot of time on this show last week talking about it's a major issue for the market because it's a major issue for the economy. And so I think there are different things that has the market moving around. And in fact, closing on the lows was as much about China headlines than it was, hey, Ken Frazier at Merck, highly credible pharma man who tells us it's not going to happen overnight. I think if we got that news that it was happening overnight, I think the market would like it. And I don't think it's going to be time to sell the news. I do think there are a lot of places where, in fact, we built in the big fear factor. And I think that a lot of that has rallied back, especially in some of the big growth names, where I think they could actually give something back. And I think we even saw some of that today. The things that were selling off most into the close and the things that really underperformed, again, was growth. And I think that's where you get a little bit of an exhale. But no, I don't think this market sells on a vaccine. This market wants a vaccine.
Karen, same question to you before we get to the charts and Carter.
Yeah, I agree. And I think Tim just touched on it, that rotation will start to really go berserk, the one that started today, I guess, I don't know, found some legs today, if there were news of a vaccine.